Good morning, guys. Armand from Cool Trading Tools here. Today we're going to go over the market. I had a big reversal yesterday. We're going to go over some of the rotation into other sectors because there are pockets of strength in the market. Kind of what we're thinking is going to happen to the tech sector and semiconductors and AI names going forward. And also give a little lesson on when it's time to kind of be done with the stock and move on from it. So let's get started by yesterday. So yesterday the market gapped up big. A lot of it was based off of the MU earnings, right? And SMH had a huge gap up, right? Gapped up and then immediately just sold off the entire day. I mean, entire morning. And I was actually watching it for the opening range breakdown short here. On Soxel, I was watching it. I did not take it. I ended up taking SpaceX on the green to red, and I actually got stopped out, like literally for pennies, before it broke down. But that's a good lesson too, as I've said. Like sometimes when these markets get a little frothier, when things get a little bit more bearish, you can just trade the ETFs because they have great range and they will kind of capture the move versus sometimes the individual names aren't as good at moves as the 2x and 3x ETFs of the sector itself. So there's no really getting around it. That's pretty bearish for in the semiconductors to gap up, whatever it was on SMH, gap up 4 or 5% and reverse the entire move, waterfall drop to red. I mean, it shows a real sentiment shift that we've been talking about here is that good news is getting sold off, bad news is getting sold off. This actually leads into another thing is OpenAI just announced that they're thinking about delaying the. Let's take a look. OpenAI delays report as weighing delaying its anticipated IPO until 2027. Advisors of caution CEO Samuel. But long story short, what this is something we talked about a few days ago is the market is narrative driven, right? When the market's going like this, good news stocks go up, bad news stocks go up. A shift in that, because it can be very difficult from the technical side, is when you see things like this, where market gaps up, good news on MU earnings, and just gives back the entire thing in the opening morning. This is, and then you see the headlines of OpenAI delaying their IPO. These are things that, I mean, really have it written on the wall that the market wants to go lower, at least in these names. There are pockets of strength. So, what does that mean? A lot of people have been longing semiconductors in those names for a while. It's time to maybe take a breather of those. You can short if you feel like I think that there is opportunity to the short side on those. So I actually will be looking to short those. We'll go over that later in the video. Um, you can look to short those. You can just hold back. If you're a swing trader who's been swing trading the market over the last half a year, you've probably done pretty well. Just hold back. Don't do anything. Or there are pockets in strength in like retail and less sexy sectors like Caterpillar. I'm sure DE is probably doing good. Like these names are actually, breaking out. And Macy's, that's got a bullish look to it. Dick's Sporting's Goods. Let's see what Kohl's looks like. So a lot of these names, they're not as hot as semiconductors or technology names are going to be. But if you're a long trading, I mean, most swing traders are long bias. That's where you'd want to focus your attention if you want to continue trading. So your options are really figure out how to short, which isn't, some people it's difficult for. I can kind of flip my mindset pretty simply on that. Um, Switch to a sector that actually is working for long-term swing trading to the long side, or just sit on your hands now. That's part of swing trading is knowing when to take off the gas and when to be putting it on. And the last, we want to be putting on swings when the market is like this. when it's doing these run ups. And then you want to be a lot more selective when you get into these phases of consolidation that I think we're likely entering in right now. And like what it is if you want to continue swinging there, this isn't the time where you make big money, but then you go and focus on sectors like, construction right now, or Macy's and Kohl's. These names are working to the upside versus we're starting to see the cracks on the semiconductor and technology names. So, just food for thought on that for the rotation that's clearly happening. Another thing I noticed too, this is not part of the video necessarily, but China is kind of sneakily just getting smoked right now. This is actually borderline a rubber band long. I just hate the way that these names trade. They gap down a lot, but I mean, this is like 33% over the last 3 weeks. But anyways, let's go back to the lesson of the day. So I shorted. So this has actually been my best stock for the year. Just these 6 days right here have, 7 days too, have created my best profits for the entire year. I was on SpaceX. The reason I'm bringing it up is because now this is where I think is really good for new traders to not fall in love with the stock. Is that I am already, even though last week and the week and a half before that, this was the best stock I've traded, I'm losing my interest now on it. Why? Because I'm trying to be objective. The volatility is dying down. The original heat is going off. So like I primarily day trade, swing trading as well. But when the momentum dies off, you need to be objective and be ruthless on your watch list. Eliminate the names that are no longer giving the volatility. I'm not saying SpaceX is at that point. It could still, fake breakdown, bounce. It could show there's still volatility that could come into it. But we are already seeing decreased volume and decreased volatility. And therefore, it's not really on my watch list this morning as a tradable name. I'm not that interested in it. The point being is that don't fall in love with your stocks when they stop giving you what you need to make money. To me, it's just getting significantly a little bit more choppier than these like nice trending intraday moves. Now the range is getting tighter, volatility is decreasing. Just be willing to stop trading it and look for new names when the time is right. You're going to lose a lot of money. A lot of traders, even if you're not a great trader, if you're trading names like this, you're going to, at least while you're learning, be breaking even because the volatility is enough on your winners that it'll make up for your losers. So even if you're not doing a very good trader, you're probably going to break even. Once you're good, you're probably going to make money. Doesn't matter who you are. When the volatility decreases, I have the 3% of the price of the stock I want as the ATR. So if the stock is $100, I want a minimum of ATR of 3%. This is still above that, but having a threshold on volatility will keep you in the game because it doesn't matter who you are. The best trader in the world is not going to be able to make money on stocks that aren't moving. So just be willing to stop trading a stock when the volatility and movement is not there anymore. There's nothing wrong with that. You can come back to it when it's hot. Now, this one still might be in play, but I'm not watching it anymore for today. So, what I will be watching today is going to be on these names here, right? Like SMH. I think, let's go to the QQQ first. We have this pretty clear level here, around 700, between 705 and 700, right? That we can be watching for the breakdown. Also on semiconductors, I don't love this setup because what's the reason? We had a big gap down. So like when we go to break this level, we're already going to be down 3-4%. It's tough to hit that into the lows. Ideally, you anticipate a little bit, cover some into the lows, and then allow the rest to work, right? So does that make sense? Don't wait for the breakdown and slam it there because at that point, we're already down 3-4%. Ideally, you maybe anticipate on an opening range breakdown like this, for example. Now, this is just to show the technical pattern, but you look for the pattern, right, of showing bearish action. You can anticipate, cover some as we get towards the lows, and then now you just allow yourself, you cover some into the lows, allow yourself on the second half to see, do we break down, right? And that's like a good way to trade. We talked about the other video is like just putting yourself in a position to capitalize. I think even if it does break down, a lot of times if you're hitting it at lows, it might not be clean and choppy because there's people buying support. There's people like, oh, it's 4% down, it's buying it. It'll be a little choppy and then not be a clean breakdown, which can get you stopped out and chopped up. So, and a little bit of anticipation. I think to me, the writing is on the wall with what's been happening. We've seen, like I said, just negative price action, negative sentiment on these names. The volatility is still there, which is why I'm looking to short them and not necessarily leave them alone. If it was just like, for example, Baba is a great one. Like, this has been down, but look at these range. I mean, $1.50 range on this days. Like, there's nothing to do with that day trading. So it's just like a trickle down on these names like Soxel. We're still getting on a $200 stock, $43 of movement. I mean, that's well above 10% of the ATR, which we said 3% is the minimum threshold, of volatility. So this is still giving a good amount of volatility here. And I think it's still shortable. And I still think there's a lot of people that are sitting on profits, kind of hoping for another leg up. So the names we'll be watching on that, Soxel. Like I said, sometimes it's better to go with the ETF. I think this SNDK, not directly, I don't know if they're full business. I know they do hardware. But this, I think, can get taken down for a leg down. Like, it would not be unreasonable to expect a pullback on this. This is the monthly chart. It's not unreasonable to expect a little pullback on this. I don't really see the technical visual setup yet on it. I don't see anything that's technically telling me that's going to break down. It's more just believing that and understanding that if technology like the NASDAQ and semiconductors break down, this will likely follow through. There's probably a lot of people that are a little itchy trigger finger on that as well. Marvel, I think, has a little bit more of a clean level here for if you're the semiconductor breakdown. Same issue as we were talking about with SMH, that it's going to be testing that level at about 6.5% down. But it has, if you look at that hourly chart, clean area to watch for the breakdown. SpaceX we're leaving alone. Nokia is another one here. This is not really a related sector to anything that we're talking about, but I think it's been a little bit hyped lately, and it has a decision time. It's kind of like we were talking about Poet the other day, right? Poet on multiple supports, the IPO breakdown, 50 SMA, price action supports here, right? Everybody's thinking, okay, getting ready for this swing on this all-time high, right here. I was looking at it to buy off the 50 SMA for a swing. I really was, but we got this day here, and what that told me is that, and there's still probably continuation in this. This is actually probably a great name for the semiconductor space as well, to short. That everybody who is anticipating the breakout in this area and even buying around this time is now also seeing the writing on the wall and willing to bail out on it because it's clear, obvious break of the bull flag structure, right? Same thing on Nokia. This is a very obvious pattern, right? Holding support, breakdown or breakout potential, right? Whatever, you don't need this line, but you can see the support, right? You can see on the hourly chart, test, right? This, I think, if it gets below this 13 area, well, don't have to go 1320s area, I think that there's a chance that this gets a pullback and flushes as well. Same setup kind of as that Poet there. So anyways, getting a little long-winded here. Long story short is if you're going to long, stick with the names that are rotation into Cat, Deere, Macy's, KSS, Kohl's. I think breakdowns are still on the table. The writing is on the wall when we see this. It's a little bit more of a timing situation. We're also going into the weekend. I think it's on watch today. So anyways, Armand, cool trading deals. Have a great day, guys.